New numbers are in, and the inflation rate here in Canada is now at its lowest that it has been since September. In December, inflation came in at 1.8%. That's down from 1.9% in November, and it even came in slightly below what economists were expecting. And this is now the fifth straight month that inflation has stayed at or below the Bank of Canada's 2% target rate. When inflation stays this low for this long, it raises a big question. Will the Bank of Canada continue cutting rates as we move through 2025? Let's break it all down in this video today. Now, one of the biggest stories in this report is how much food inflation has cooled down. In November, food prices were up 2.8% year over year, but in December, just 0.6%, and that is a major slowdown. One big reason for the lower restaurant prices is probably the GST and HST tax breaks that are in effect right now. Normally, food that's bought at restaurants gets more expensive over time, but in December, restaurant prices actually fell by 1.6% year over year. That is truly a rare drop, and it did play a pretty big role in keeping overall inflation lower. The question is whether food prices are going to stay low for much longer, or once that tax break expires, obviously restaurant prices could bounce back. Now, we also need to take a look at housing costs. They are still high, but they are slowing. And if you are paying rent or if you're paying off a mortgage, you'll know that housing costs are still pretty painful. This report, though, does show the price increases are slowing down at least a little bit. Rent inflation slowed to 7.2% in December. That is down from 7.7% in November. Mortgage interest costs were up 11.7%. But that's actually the smallest increase since October of 2022. So even though these numbers are still high, the fact is that they're trending downward. That said, a shelter cost is still one of the biggest drivers of overall inflation, and that will be a key factor in the Bank of Canada's interest rate decisions as we move through the coming months. So we've got food and housing costs that are cooling off, but there's one category that is not cooperating, that is transportation. When we looked at the most recent report, gasoline prices were up 3.5% in December. That compares with a 0.5% drop back in November. Transportation costs overall were up 2.3%. That's more than double the increase from the previous month. So you have to ask, well, why this sudden jump? Well, a lot of this comes down to what are called base effects. So this is last year, gas prices were much lower. So when you compare this year's prices to last year's, the increase just sort of will look bigger. So yes, this was expected, but it's also something to keep an eye on. If our gasoline prices keep climbing, I could see inflation creeping back up in the coming months, and that, again, might affect the Bank of Canada. It might make it more reluctant to cut rates, at least too aggressively. Now, I want to talk now about core inflation, and the headline inflation that we just looked at. That is encouraging, but the core inflation, it tells a little bit of a different story here. That actually rose to a 6-month high now of 1.8% in December. That was up from 1.6% in November. On a monthly basis, though, core consumer prices actually fell by 0.3%. That's the second consecutive monthly decline after we saw a 0.1% drop in November. So this uptick in the annual core, it might mean that there is still some underlying inflationary pressures in the economy overall, even though we're seeing the broader price growth slowing. When it comes to its deliberation, the Bank of Canada keeps a very close eye on core inflation, as that offers sort of a clearer picture of how sustained the price trends are. So unlike the headline inflation numbers, this rise might give the bank some reason to approach rate cuts a little more cautiously. So when we look at this in its entirety, what does it mean for interest rates? We have seen inflation below 2% now for 5 straight months, looking more like the Bank of Canada could continue cutting rates in 2025. The next decision, by the way, comes up on January the 29th. Now, they've already lowered rates to help the economy, and this report sort of only adds to the case for more easing ahead. But, and this is a big but, we don't want them moving too quickly. Even with the drop last month, shelter costs, as I mentioned, are still pretty high, and the gas prices are rising. So they're going to want to make sure that inflation sort of isn't about to take hold again. Also, the bank has been clear that they don't want to cut rates too soon and risk undoing all the progress that they've made in bringing inflation down to this point. That said, though, if inflation does stay low, the economy continues to slow, we could see another rate cut as early as the next meeting. So let's look at the big picture here. Inflation is cooling, food prices are dropping, rate cuts certainly do seem more likely, but gas prices, these are creeping up. Housing costs are still a major burden, so it is not all smooth sailing. The key question is, will inflation stay low enough for the bank to keep cutting rates? What do you think? You can drop your thoughts in the comment below. Now, another story that's come out in light, especially of all the loosening potentially of the crypto rules down in the States because of the new administration, Bank of America CEO Brian Moynihan, he says that the financial industry, in his opinion, is ready to embrace cryptocurrency if it's given the green light by the regulators. regulators. Right now, the banks are hesitant because of the legal uncertainties and concerns over compliance. During an interview at the World Economic Forum in Davos, Moynihan, he explained that the Bank of America already explores blockchain technology, but fully adopting the crypto services will depend on government oversight. He says that if the regulators say it can be done, the bank will obviously engage in it, as it makes a whole lot of sense. Now, a lot of financial institutions are interested in crypto, but they need some more solid legal framework before they jump in. Now, the space itself scored a pretty big win back when the SEC approved spot Bitcoin ETFs last year, and that has certainly led to more mainstream acceptance. The banks still, though, face pretty considerable restrictions on offering direct crypto services. And Moynihan says on that the banks can't do a lot of it directly because the regulators simply won't allow them to do so. Now, there are some institutions like JP Morgan, they have developed their own blockchain-based services, but widespread adoption of the crypto by the banks still has not materialized. Now, earnings season is off to a pretty strong start. U.S. banks are leading the charge, and the Harvest U.S. Bank Leaders Income ETF, HUBL, on the TSX offers exposure to top U.S. banks and financial institutions. 4 of the key holdings in HUBL, Wells Fargo, Citigroup, JP Morgan, and Goldman Sachs, they all put together strong earnings results earlier this past week. Now, some highlights that are driving the optimism for the U.S. banks, they include resilient margins. There is a regulatory sentiment shift with the new U.S. administration, continued trading strength, and strong capital returns. The importance of the U.S. banks also extends to the Harvest Diversified Monthly Income ETF, that's HDIF, on the TSX, which has maintained a strategic overweight position in U.S. banks. So it is not too late to join the rally in the U.S. banks with HUBL and HDIF. I will put a link to these funds and Harvest's most recent Insights blog post in the description of this video. Now, my last story today is about British Columbia, the province getting tougher with short-term rentals like Airbnb and VRBO. And starting in May, anyone who's operating a short-term rental is going to have to register with the province. Now, they're also going to need to display their registration number on their listings. The goal here is to crack down on illegal rentals and free up more homes for long-term renters in this housing market here that's already stretched pretty darn thin. Now, Housing Minister Ravi Kahlon, he says the new system is going to make it easier to enforce the rules. He says with this registry, local governments are going to have the tools they need to enforce their own bylaws. The government will now be able to track short-term rentals more closely, and platforms like Airbnb, they're going to have to remove listings that don't have a valid registration number. So this means that hosts who try to avoid the rules could face fines or could get shut down. Now, BC also recently expanded its short-term rental restrictions. It limits rentals only to the owner's primary residences in cities with more than 10,000 people. So this means that investors who bought properties just to rent them out on a short-term basis aren't going to be able to operate in a lot of areas throughout the province. As you might imagine, should come as no surprise, there's some hosts that aren't exactly happy about this. They're saying that the rules are too strict, especially in the popular tourist spots where short-term rentals are in very high demand. But the province is insisting that this is necessary to tackle the housing crisis. They're saying that with this stricter enforcement coming, the short-term rental operators are either going to have to adjust or find another way to use their properties. That is a wrap for today's program. As always, I thank you for watching. I look forward to seeing you in the next video.